Hey there, Russell traders. David here of TradingFibs.com for the daily market wrap for the Russell for May 29th, 2013. Earlier today, I did a trade recap of my entry under the 25-minute open range. You can catch it on my website at TradingFibs.com or on my YouTube channel named Trading Fibs, where I was able to take a 40-tick advantage of under the 25-minute open range with contracts off on the way down. 2 contracts, $530, and that was pretty much it for the remainder of the day. Taking a look at, again, in review, a 280 dive from the weekly R1 high of about 1,005 from yesterday, and within 24 hours we came down to 978. So what a wild ride for the day. As you can see, price action remained within the 25-minute open range till about 1 hour past the open. Took advantage of this momentum with market internals dropping, and price bounced back up and pretty much closed that around the monthly R2, chopping it up in action to the weekly pivot. Looking elsewhere on the open ranges, again, we could see that on the E-mini and the Russell and the NASDAQ and the YM, all coming down from a high from yesterday. All had the similar morning action with the dive under the 25-minute open range. And the NASDAQ being the only one that found a little bit of a push above, but came back down inside the range. The E-mini pretty much staying within the range, the YM pretty much staying within the 25-minute range, again the TF closing at the low of the range. Crude had a nice move under the 25-minute open range, but pretty a lot of choppy action. The soybeans, beans keeping it in between the range, and Apple having a nice push up, coming back into the range and up above as well. Looking at, once again, on a recap of the Heikin Ashi candle, the range chart. Waiting on the 1 hour open range here at 985.5, my 25-minute open range above. Didn't take a trade till under 980, entry was 985, and wrote it down all the way to around 978. As you can see, price came right back up in the 25-minute open range. These are all nice buy signals, so technically if you're a moving average crossover technical entry, you could have entered here and come off anywhere up inside the range. But again, this is not my trading style. One move for the day. And again, we just chopped it up the remainder of the afternoon. Here on my daily pivot and cam lines, you can see that price action had broken the Camarilla pivot L4. Came down to daily S2, wrote it back up, and finished off here in line in between Camarilla L3 and L4. Finish off really on top of the daily S1, which was in line with our weekly pivot as well, and in between that and the monthly R2. And then a 1 hour open range. 1 hour open range with a high today at 993. In conjunction with the 25-minute open range, had the entry below here at 1 hour 10 minutes past the open, and wrote it down past daily S2 on a post 1 hour. Came back up to the pivot, found support here before actually coming back up, and bringing it up to the pivot and chopping it up inside this range as well, like our CAM L3 and L4, and finishing up at the daily S1. So there they are all together. Nice picture for support and resistance coming back into play. But really the action, the momentum was in the early first 2 hours, and for the remainder of the day really just came back up a little bit and chopped sideways. Market internals were reflective of that, as the market really took a dive in the morning, Momentum brought it down, took advantage of that early. In the remainder of the day, we saw a tick really not being able to come above zero until about almost 4 hours post the open. In the remainder of the day, just a lot of up and down action. Our market breadth was in the negative for the majority of the day. It's sometimes the NYSE was 3-to-1, Nasdaq was about 3-to-1. So all red all around. When we get green light on one and red light on the other, that's when I'm hands off on the market. I'd like all my signals to be in congruence, either all red signals, all green signals. Otherwise, that depicts choppy action for me, or I'm at least going to take off my contracts earlier than a trend. AD line was very negative. We were at the negative 2,500, which still remained a pretty down day, had a little bit of an uprise and sideways action, so that really did keep me out of the trades for the remainder of the day. I'm going to go ahead and show you a chart that I actually came up with. I put together, I'm going to post this on my Twitter account, as also on the blog for this daily recap, but three charts that really stood out today that helped me enter into this trade. When I put that in summary, again, here's my 25-minute open range, 25-minute open range on a range chart, 25-minute open range on a also a range chart, but here I have a 534 exponential moving average, and on the chart on the right here, this is a 513-2180 exponential moving average, and then a 5-minute bar here on the left. As I did in the previous video, I did not enter until at least I was coming down underneath the camera pivot L3. I was looking for under the 1 hour open range. But once I tucked under this monthly R2, entry was 985. I had several targets downside. I had a post 1 hour S1, I had a post hour S2, I had a daily S2 that I could take contracts off at. So once this momentum was going and market internals were matching, it was just a matter of trade management. I know that I've made a lot of posts in the past. In the past where I've shown exponential move over, exponential crossing over. It could be an entry, which would have worked out very nice today. You just take the crossover here and write it down, which was nice to see that. Not only did I have the candles in a sell signal here, I had the sell signal on the 5 coming below the 13, the 21, and the 80. So the congruence here of the two charts together is a powerful sell signal. I'm coming up to the 25-minute open range, but my trading style is to wait until the trade goes under the 25-minute open range or break any resistance line or support line that I'm looking at, depending on the direction. But once I broke this 1 hour open range low, which you can see over here at 95.5 on both charts, the entry bar and taking the option to take half contracts off at an up bar on the blue here. And then either moving the stop down to 982.2, which is where you took half the contracts off, or just simply exit the trade at this point. Yes, the market could have still kept going down, could go all the way down to zero, but at some point you knew that buying would step back in. And not to be greedy here, but just take what I could. So nice lesson here for myself as well. I do watch all 3 charts in addition to others. I like the sideways action here, and then the crossover on 1, the crossover on 2, showing me the momentum, and then under the 25-minute open range. And wrote that down as I showed before. $530 on 2 contracts today. That's it. I'm not a big player, but $530 is $530 you didn't have when you started the market in the morning. So again, market internals pretty much in the red today. When anything goes green and red, that's pretty much choppy action to me. Review here again, a lot of action inside the range once our moves came underneath. And we finished off at the weekly pivot. GDP and jobless claims on deck for tomorrow. So who knows where the market will go? I'll just wait tomorrow to see if action pops above the 25-minute open range or below the 25-minute open range, and looking at the market internals for to be either all in the red or all in the green, and we'll make my decisions from there. Have a great day, and I will see you tomorrow.